So in this video I want to give you a short brief on the chapter of risky financial statement. So this chapter is very simple and straightforward. So what you have to know is the main key that you have to follow. Okay, and you must be able to understand the requirement so that you will be able to know what are you going to list. Okay, the first required that must ask on this question that is related to this chapter is this one. With regard to the opening paragraph on dense Chrome group business background information, describe the risk of material misstatement at overall financial statement level for the then Chrome group. So the main key for this question is overall financial statement level of dense group. So what do they mean when they say overall? So when they say overall, they mean everything on financial statement. What will be the risk on financial statement overall? So they mean in everything, not a specified item. Okay, so how does this question differ from the second one? On the second one, they said, with regard to the financial data of Chrome, describe the risk of material misstated at the assertion level of Chrome for each of the item listed. So when we talk about the assertion, you have to remember that on assertion we have something like cutoff, we have something like accuracy, completeness, and all those stuff. So under assertion, what I can advise you is that they're gonna give you the subheading of the assertion that you have to discuss. So mostly the assertion that they are going to give you on the most question paper that I have saw is that you have to have at least the knowledge of accounting. Why? Because they are very important. If you know the background of accounting, it will give you some point that you are going to discuss under assertion level. Okay, let's start with the first question that says you have to discuss the overall. Okay, let's go to the scenario. So this scenario, they are very long and I can't read everything. Okay, then let's go through it. Question 1, they said you are a financial year, you are a first year trainee accountant at Andre Gauta Phrase Incorporated, that is age. Is a medium-sized firm. Why did I highlight medium-sized firm? So if you are a small-sized firm, simple means that the company that you can manage to audit, they are the small companies. So if you are a medium companies, you can only be able to audit a small and medium companies. You can't be able to audit a larger companies. Okay, so that's why I highlighted that point, which means that you have to pick up a point in that case. So there is a risk if this company that we want to audit in this case is a big company, that will be risky that you have to raise under overall. Okay, then you are one of 6 audit team member to audit Chrome group. So you are one of 6. So in other words, in our team we are only 6 members. So if we are dealing with the biggest company, we can't be able to audit that company because we are only 6. We can't manage. Okay, so that's the key point that you have to pick up. Each and every paragraph that they're gonna give you, even if it's the first one, is very important. Please make sure that you pick up the point. Okay. Then in preparation of the audit of Dunchrome Group, your audit senior presented to you the following information on Dunchrome Group. Then Dunchrome Group business background. Then they give us the background of the company. So the company that we want to audit is Dunchrome Group. Okay. So Dunchrome Group Ltd. Was established in 1976 in South Africa. Its core business is the mining and smelting of the chrome ore. Okay, Dunchrome is one of the largest integrated ferrochrome producer in the world. So I highlighted that point. Why? They told us that this company is the largest company in the world. Remember, we are medium-sized firm, as they stated on the first paragraph, which means that there is something that is a risk here. Okay, with an annual capacity. Okay, let me not read there. Then let's go to the second paragraph. Then Duncrome's mining operation are situated in Mayton, and the head office is situated Central Business District of Johannesburg. Then the Dunchrome Group employ a workforce of 16,300 employees. That's another indication that this company is not a medium-sized company, but it's a larger company that we are going to audit. Okay. Then the other key point that I have noted is that, okay, the appointment of age as an auditor of Dunchrome come about as a result of the previous audit filling the notice of resignation. They resigned because they considered themselves not having adequate resource to service Dunchrome due to company's growth. So the previous auditor that they were auditing this company, that we want to engage with them, they find that the resources that they have, they can't manage to audit Dunchrome company as it's growing. Okay, which means that we also have to take note of that. Okay, let's check the other point. Then the one that is highlighted, same coal has 3 coal mining sites in various areas of Mpumalanga province and a newly established mining site in Limpopo province. So they told us that this company has various areas. In other words, they have many branch. So if they have many branch, as a company that we want to audit this company, we must have many resources. We must have many members. Remember, in this case, we only have 6 members. Okay. Then the sale, the highlighted paragraph, the sale was completed successfully in May 2010. This results in the listing of Dunchrome from JSE, a listed company. Okay. The key point in this one is a JSE listed company. So there is a risk in this case. There is a risk that this company will not be able to reach the level that they will be listed again. Okay. Then the other point is that okay, employees of Dunchrome Group went to strike on July 2010 over a salary increases. This strike lasted for 2 weeks. Then Dunchrome Group was not be able to export ferrochrome and coal to overseas customers due to this period. So these customers represent 80% of the group's customer base. So this company didn't manage to export goods from to overseas, which these customers, they are regarded as 80% of the customer of Dunchrome. So there is an indication of a loss in this case. So as a result of group recorded a loss in 2010 financial year for the first time. They recorded a loss for the first time. Then, okay, the other paragraph, you can read it. Then to ensure that Chrome is well managed, a significant part of remuneration of directors is incentive based. The director's remuneration is determined by the audit committee. There is a risk in this case. There is a risk. In other words, the remuneration of directors, they are given the incentives according to the profit made by the company, and they said is determined by audit committee. So there is a risk in this case that the audit committee will not be able to comply with King 4. Okay. Then the other part, they say the Department of Water Affairs and Forest has raised the concern about the illegal mining operation performed by Semcoal on the cultural heritage site in Limpopo province. So this company is running some of the mining companies illegally. So there is a risk even in this case that they won't comply with rules and regulation of the government. Okay. On 5 September 2010, attorney of Dincrom Group indicated that the court is likely to rule in favor of the Department of Water Affairs and Forestry. Then the estimated cost said to restore the site amounted to approximately 10 million. So the lawyer of this company said that the chance of the of Dancrom to win this court case is very low, which means that there is a more possibility that this company is gonna pay 10 million. Okay, which means if we are talking about accounting, we're going to apply IS 37 of contingents and provision. So they have liability to pay 10 million. So this is an indication that there is a risk that company will fall. Then the acting CEO has informed the age that the new holding company require the audited financial statement of Chrome within 2 weeks after year end. So there is a risk even in this case. There is a risk that the time that has been given of 2 weeks is very short. The time deadline can make that the auditors that are auditing the company, they won't be able to complete their work. So they will submit incomplete work, which is very risky in financial statement. Okay. Then the other information is for number 2. Okay, let's first go through this solution. All right, number 1, they said, okay, let's read the one that I highlighted. Other one you can go through it on your own. Then the directors might be involved in fraudulent financial reporting to improve the net assets value or the profit, as the directors have 15% shareholding in Chrome. So this is the same point that I was saying, that there is a risk that the directors might manipulate the financial statement in order for them to earn the higher amount. Remember, the higher amount, the percentage that they have, they're gonna get the higher amount. Okay. To overstate the results of significant part of directors' remuneration is incentive based. Okay, I have explained this part. Then the director's remuneration is determined by audit committee. So there is a risk that non-compliance with King 4 may indicate the lack of management integrity, which increase the risk of fraudulent and financial reporting. Okay, this part I explained. Let me check the part that I didn't explain. Okay, the issue of going concern, guys. If you find that there is a problem or there is a risk of a loss in that company, please, this point is always there. Make sure that you pick it up. The going concern is always at risk if the company is making a loss. Remember, a going concern is determined by the profit of the company. So please make sure that you write this point. Okay. Then there is a tight deadline audit. Remember, they are only given a 2 weeks, the one that I explained. Okay. Then Chrome Group sell a product to oversee customers. So there is a risk that then group may not comply with all relevant law and regulation. In this regard, resulting in then Chrome being prevented from operating in foreign country. Remember, if the company is not complying, remember, if it's not complying with the rules and regulation, remember this company is dealing with illegal mining, which means if they are not complying with the rules, the country that they are exporting to, if they can know that there is a risk that this company is not complying with the law, which means that those customers, they are not going to buy the product that they are selling, because they are going to be prevented to sell to other countries. Okay, then Chrome operate within a group. So in this case, there is a risk that the company will not be able to consolidate. Remember, if we are dealing with a group, we have to prepare what we call a group statement, which on group statement we have to comply with accounting standard, we have to comply with IFRS 3, we have to comply with IFRS 10, and all those related group statement standard. So in this case, there is a risk that they won't be able to comply with those standards. Okay. Then the other one, the last one, then Chrome Group operate in strictly regulation industry, and therefore there is a risk that all relevant law and regulation, including Company Act of Sales of Share, might not be complied with approximately. So this one is related with the one that we did for that this company is dealing with illegal mining. Okay, then number 2, they said we have to discuss assertion level. Okay, under assertion level, they told us that okay, we have a trade receivable. So what you have to do, you have to go through the paragraph. Always remember, if there is no problem on the question, there is no reason to test you. So each and every paragraph, there is a problem that you have to identify. Okay, then when the sale is made to international customer, then Chrome entered into forward exchange contract to protect itself against the foreign currency fluctuation. So this company is trying to protect itself against the foreign currency. Remember, when we are dealing with the foreign currency, we have to comply with IS 21 of foreign exchange. We don't do the way we want, but we have to do according to the accounting standard. So there is a risk in this case that these people won't comply with IS 21. Okay, then we have provision for rehabilitation, then we have a goodwill, and we have a patent. So that's the assertion that you have to pick up. You're gonna have a revenue, which you know that is IFRS 15. There is a risk that they won't comply with what? With IFRS 15. Okay, let's read this one. Revenue has decreased significantly and compared to previous year due to the strike and occurred during the current financial year. So this sentence is telling us that okay, this company, because the revenue is decreasing, and remember the directors in according to the profit made, which means that there is a risk that they will manipulate revenue. If they manipulate revenue, they are not complying with IFRS 15. So, alright, they give us the revenue in terms of IFRS 15. They give us the correct step. That does not mean that there is no problem. And that doesn't mean that there is no risk. There is a risk, because this company was not making a good revenue, which means that they can manipulate what? A revenue, which is going to be against IFRS 15. Okay, so if we are talking about provision, we are talking about IS 37. Goodwill, we are talking about IS 38 of intangible assets, same as patent. Okay, so let's go to the solution for this one on how they discuss it. Okay, revenue, they start with the revenue as a heading. Revenue might be overstated due to the fact that company's financial performance is not good compared to the previous, and the directors might want to project better results, which means that assertion on this case, they won't be accuracy and they won't be recorded according to the cutoff. Remember, cutoff, we're talking about the transaction of that year. You have to record only for that year. For next year, you have to cut. Okay? So, in this case, there is a risk that they won't comply with IFRS 15. Please make sure that you start with the one that is from accounting. That's going to be easy for you. Just simply say, before you even read the scenario, once you see the revenue, just say that there is a risk that they won't comply with IFRS 15. You will get it right. It doesn't matter which scenario come, as long as there is a assertion of revenue. Okay? Then the other point, you can screenshot and check them. Okay? Then we have trade receivable. So, for trade receivable, there is a risk that they won't comply with IS 39. So I'm not really familiar with IS 39, but the other standard that is going to be part of trade receivable is IS 21. Remember, if we are selling on credit to customers who are outside the country, we have to apply a foreign exchange. So there is a risk that they will manipulate the foreign exchange rate. Okay, so you have to check that. Then the other point, you can check them. So, but what I was trying to emphasize in this question is that please make sure that you start with the accounting point. Why? Because there's no need for you to go to the scenario. Once you see that there is a provision for anything, as long as it's provision, just say that this company won't comply. There is a risk that this company won't comply with what? With IS 37. Then from there, go to scenario and try to pick something. There is a risk that the provision might not be valued correctly, as we have to rely to work on the expect, which is valuation. Okay. Then the other one is a goodwill. There is a risk that goodwill might not be accounted for it properly in terms of IFRS 3. So this one, they started with accounting one. So this point, there is no need for you to check the scenario, guys. Just cram it. If it come, write it first. After that, go to the scenario, try to check something. Okay. Then if you are talking about patent, there is a risk that the company will not follow the requirement of IS 36. Is this last point? Then the other one, you will find it on the scenario. There is a risk that amortization could be based on inappropriate amortization method. Remember, amortization is like a depreciation. Okay, so there is a risk that useful life used to depreciate the patent is incorrect, as the years used to write off the patent are more than years of contract. So this one is on the scenario. Okay, so that's the clue that I wanted to give you guys before you write the test. So please make sure that when we are dealing with overall, make sure that before you go there, go with the headings. Because if you don't know the headings, what are you going to discuss? It's going to be a problem. So make sure that you know those headings. Then the other things, you will find them on the scenario. So there is other points that it doesn't matter which kind of scenario you have been given. They always there. So if okay, when we are talking about auditing, is that each in every scenario there is always a problem. There is always a problem. And if you check the questions that you have, which is related to this one, all of them, they are talking about the same problem. Actually, audit does not change. The audit does not change at all. Answers are always the same. It doesn't matter. The scenario can change, but the answers, I'm telling you, always the same. So I hope you learned something. We'll see you next time. Bye.